Welcome back to the Banking on Data podcast, powered by Lumio Solutions, where we invite experts from across the community banking and credit union industry to share best practices for enabling risk-informed business intelligence. Hello, welcome back to the Banking on Data podcast. I am thrilled to have with me a friend and colleague and industry visionary in Phil Goldfeder, the CEO of the American Fintech Council. Phil, thank you very much for coming back and joining us on the program.
Ed, I want you to know I only come back because you're the only person who thinks of me as an industry visionary. I will take it. I am not one to pass on a compliment anytime. Again, really appreciate your partnership. You've been one of the longest members of the American Fintech Council because you believed in what we were building. You believed in a sound regulatory foundation, and you were providing that for a lot of your partners. And you've been a big part of building our organization equally sound and equally steady and strong. And it's great to have you as a partner. It's even better to have you as a friend.
Before we get into kind of the meat of today's conversation, my comment about you being a visionary was not purely flattery. There is something to why the American Fintech Council exists, right? And it is a vision of where the industry is going. So maybe before we get into, say, my fundamental question of the day, which is, what does the future look like for community banks? Because that intersects a lot of the different points that we tend to talk about. Start, if you will, with giving folks a reminder as to why the American Fintech Council exists and a little bit about responsible innovation and kind of why that matters here.
So thank you for that. And you're absolutely right. The American Fintech Council was founded to accomplish two things. Number one is put innovative banks and responsible fintech companies under the same roof, right? Create more collaborative opportunities to work together, to talk together, to share pain points, to recognize the challenges of each other so we can build a collaborative future of financial services that looks great for consumers. But number two, when it comes to emerging industries, it's important that the industry sets a standard, right? Creates the line of demarcation between what is good practice and what is not good practice, what is regulatory sound and what maybe is stretching the line or crossing the line too far. And AFC, the American Fintech Council, is one of the only standards-based trade associations that is focused on emerging technologies and verticals within financial services. And so whether you're offering buy now, pay later, earned wage access, embedded finance, innovative banking, banking as a service, and everything in between, the American Fintech Council sits at the intersection of the most innovative emerging technologies and the policy regulatory structures that will ensure that all of us can survive for a long time to come. And I'll say this to you, and again, where Lumio fits in this puzzle is you can talk about consumer offering products all the time, right? There's this great new consumer product. There's this great new technology that enables us to do X, Y, Z for consumers faster and better. You also need to talk about how are you keeping pace on the regulatory side, right? There's two sides of this, right? It's great that you can get consumer products faster, more efficient. It's great you could provide consumers more optionality, but are you scaling your regulatory infrastructure just as quick?
Right.
And you have to be honest with yourself. I think as a responsible fintech company, as a responsible innovative bank, you need to do both those things at the same exact pace. I would argue the third piece of that is the regulators need to stay at the same pace. And that's kind of where the American Fintech Council fits in, as we try to make sure that we're bridging all of those gaps, again, for a safe financial future.
We had a great conversation in one of the American Fintech Council working group sessions just earlier this week with Eric and Ian and a handful of other members, and that was one of the topics was ensuring that the regulators are educated and empowered and equipped to be able to participate as the third leg there, and making sure, right, that they are at the table as we are talking about standards and emerging technologies and what does the future look like of this industry. One of the first thing you said there around what a collaborative future looks like between fintechs and community banks, really predicated on reducing friction and making that experience for the customer optimal. I asked Joe Barry, who's the head of investment, co-head of investment banking at KBW, on a recent episode about why fintechs even exist. And he went back to just that point, Phil, which was fintechs exist because there was a need to reduce friction in the consumer's financial services experience. Um, and by extension, right, then consumer became small business, which became medium-sized business, which became large commercial. But it really was about reducing friction. And as you said, though, now also making sure you're doing that in a responsible way. So I think that those themes, right, are important as we think about, right, what does the future of community banking look like? Because there are clearly lessons to be learned by those innovative fintechs who are kind of the tip of the spear, the front end, and pushing the envelope there. Remembering, right, you've got an ultimate recipient of value. Are you doing everything to make their life as pleasant, as easy, as productive as possible?
Yeah, but and here's I think is key is this is sort of where the industry associations come in is we shouldn't wait for regulators to find a problem or interpret what we're doing on their own. We need to do a better job, and I think over the last few years, as part of the AFC, we've done that. We need to do a better job, number one, of defining what the standards look like ourselves, right? Like set what those parameters are as responsible industry participants, and then more importantly, make sure that we're telling not just the regulators but the world that not all fintech is created equal, and there are those who are invested, spending the time, energy, effort, resources to build a solid foundation so that they can continue to scale their consumer offerings without compromising on their compliance and or risk functions when it comes specifically to financial institutions.
So if you're a community bank now and you've taken a nap for the last 20 years and you wake up today and you say, okay, competition has changed, right? Some people have figured this out. They have brought they have identified fintech partners or the fintechs themselves or banks have evolved. What does that competitive landscape look like today if you are a community bank?
So it depends who you ask. Ed, you were with us last year when we were in Nashville for our CEO event. And that was sort of a topic of debate with Joe Maxwell and a few others talking about kind of what does the future of community banking look like? And I think the debate was over, how many banks and how many community banks are going to exist in a year, in 2 years, in 5 years. Uh, you can't deny the fact we're seeing more and more of a consolidation. We'll talk about, new charters and new entrants soon, but you're certainly seeing a consolidation. I think today 4,600 community banks left across the nation, and that number is going to continue to shrink. Not because not because they can't provide a service, it's because consumers are looking for new ways to access their financial services. Full stop, right? Community banks, to the extent that they have consumer base, should continue to thrive. But the fact is, my daughter doesn't bank the same way that I bank, right?
Right.
Once upon a time, when I opened up a new account, I took my passbook into the teller, right?
Yeah.
My daughter has 7 or 8 different apps. And so the question you asked me is, so what is the future of community bankers? Those who recognize the opportunity, and more importantly, those who recognize the risks of of that opportunity and build the right solutions to solve for the risks so they can take advantage of the opportunity. I want to say that again because I think that is the most critical point. I think oftentimes you see, community banks thinking about innovation who move too quickly, which obviously results in consent orders, as we've all seen in the past.
Right.
You have to look at the opportunity and quickly identify the risks and now solve for the risks. And again, Ed, this is where you and Lumio come into play, where, I think oftentimes community banks don't know what they don't know. And they think that like, oh, we can do this. It's something that like, we've done something like this in the past. We can do this. We can enter into the innovation space and embrace new technologies. You've got to look at your core and your foundation first. And I think that's where a successful community banker can thrive if they recognize what they need to do in order to take advantage of the new opportunities.
So my premise is that community banks still have some very unique assets. They have local relationships, whether those are consumer or small business or medium-sized business. They have data on those relationships, those participants. Um, and and those two things are give them a huge lead against even someone that's spending, 4 billion dollars on innovation, right? If you're Bank of America. Um, but you can't just rest on your laurels because, to your point, right? The recipients, the person on the other side of that table, expects you as the community banker to come to the table with just as much intelligence or value in your conversation that Bank of America banker is going to bring. You might get the first shot because you have the local relationship. You might also get the last opportunity to retain that business, because of that relationship. But what you're not going to get is you're not going to get a free pass if you don't deliver as much value as that other institution, right?
I love you said that exactly right. I mean, go back to, we all still to this day joke about bankers' hours, right? The reason we joke about it was because who was in charge of the relationship, right? Who had the leverage in the relationship? And it was at the bank, right? And so we can close at 3 o'clock and we don't care because ultimately you have to come back to us. And I don't want to be too brash about it, but like, I think that was the general sentiment was we're it. We are the only game in town. We're the bank, right? I think
Right.
today, and this is a good thing, optionality, right? Like, competition breeds excellence. You have to
Right.
compete. There is not a bank on my main street here in my community that closes before 6 o'clock, right? They know they have to service those people who work until 5 or 5:30, and you still need to get to the bank. And so
Right.
banks now are adapting to the consumer demands. And again, fintech is a big part of that. But there is a lot of, again, innovation, as there's a maturity and as there's an evolution, with sort of generation after generation, there's a natural shift that take place that banks are not exempt from or can't get away from.
I like your comment there that, right, competition breeds excellence. So ultimately, right, maybe not all of those 4,600 community banks that exist today are not going to exist in the future, but the number might not be lower than 4,600 because it might be that you've got a handful of innovative fintechs that go out there and apply for charters and become banks. And right, there might still be room for 4,600 players in the market, or maybe not. But what will happen is that it will be the strong that survive. It'll be the innovators that survive.
Which brings us to the sort of the absolute next point, right? In talking about, well, you are seeing now more of an influx of bank applications and charter applications, and you're seeing sort of, I think, a trickling out now of approvals that are going through. And here's, again, I think that's great, right? I think, someone who's going in to sort of get a bank charter because they see a pathward to success for their company, oftentimes a fintech company, whatever space they're in, you're seeing it in the buy now, pay later space, you're seeing it in the digital asset space, you're seeing it in a number of fintech spaces who are now looking to get charters. It only works, the rules are no different for them. And that the beauty of the system is that there's a level playing field, right? You're going into that process so you can now operate as a bank. But I think that sometimes people take that for granted in terms of like what that actually means, right? They've interacted with banks because maybe they've partnered with them in the past, they've interacted and engaged, but they've never worked directly with a regulator, right? They've never had to sit in a room with an examiner, right? That has been reserved, fortunately or unfortunately, just for the banks, right? And so there's an understanding because the bank is working with their fintech partner and they're asking for information based on what they're getting, but it's almost like third party, right? In the sense that like they are not direct, there's no direct oversight, and their only oversight is via their bank partner. Now, fast forward, that fintech company gets a bank charter. If you don't fully inherently understand and appreciate how difficult it is to be a bank, the oversight, the challenges, the compliance, the sort of the rules, the sort of the nuances, you're gonna fail. Just like the community bank, you'll fail for a different reason, right?
Right.
You'll fail not because you didn't take advantage of the innovation, just the opposite. You'll fail because you let the innovation drive you and you didn't understand the core. And the
Mm.
right answer is probably somewhere in the middle. And I love to talk about our members who I think are thinking about this the right way. You look at a company like Upstart, right, who was one of the first to engage with AI and machine learning in underwriting. You look at a company like Mercury, who are they've not stopped talking about the infrastructure they're building, right? The
Right.
compliance tools they've inculcated into their systems, the sort of the investment, to slowly grow and understand these processes. To me, that's everything, right? Like these are responsible fintech companies who recognize the value of a bank charter, but also recognize the great responsibility. And I hate to, sort of, make light of this conversation, but like, as Spider-Man once said, right, with great power comes great responsibility. That is the most important quote when it comes to bank chartering, right? You are asking to be trusted with the integrity of the financial system. You better get it right. Otherwise, as my friend Kareem at Fairplay loves to say, you're going to be the consent order in a year from now, and 2 years from now, or 3 years.
Uh, that is really on the mark, right? That's a hard dynamic for that fintech because by definition, you're entrepreneurial, you're innovative, you are blazing a trail, you've probably got some hubris because you're trying things that have not been done before. And then to step into an environment where has to be some sort of awareness, if not even deference, right, to a regulatory framework and the examiner, and it's not a level playing field ultimately, right? The regulator, right, regardless of where we are in a given administration and the pendulums will swing, ultimately that regulator, they're still in charge of that relationship, right? They have the ultimate consent order card. And so to be able to come in and acknowledge that and play under a different set of rules than you've probably played under, right, up to that point. It's a cultural shift, it's a technology shift, it's a mindset shift. But I think it's interesting, right? You mentioned Mercury and Upstart, and right, folks who whether whether they invested in it from the get-go or said consciously we're going to invest in it at this point in our life cycle, regardless of when that occurred, they reach that point where they're interacting with the regulators and they're prepared for it and they are ready to operate in that environment.
That's exactly right. And something you said earlier that really struck me and I loved, because I think oftentimes people look at it as data and numbers and processes. You said something that was a little bit different. You said there's a culture shift, right? You have to fundamentally think differently in terms of how you operate, right? Like you're 100% right. Like in the innovation world, there tends to be a entrepreneurial, let's move fast and break things. There is a time and a place for that, and there's a time and a place for everything. When you start to think about bank chartering and sort of taking on that responsibility, because there's an opportunity for you as a company, there's an opportunity for your customers and your consumers, you need to kind of change that culture a bit to recognize, again, the responsibility, the requirements, what it's going to take. And it's sometimes sort of bringing in the people that are able to do the work, but also just making sure that you present to the regulators and to the ecosystem that you're taking this seriously. You're looking to build a sound foundation. And sadly, like I said, I mentioned some of the I think are some of the best examples, but unfortunately, I've seen sort of companies who are talking about it like it's just another step, and they are ultimately going to fail. And I say that as aggressively as I talk about that community banker that refuses to look at innovation. It goes the same story on both ends of the spectrum.
Well, so let's shift back to that community banker again, and right, let's apply that culture shift that has to occur there, right? The same way that it has
Yep.
to occur with a fintech coming in, it has to occur with a community bank that's trying to not only survive, they really have to evolve.
Yep.
Joe Barry made another comment when we were talking about the fact that community banking. Has changed. It's not, it is changing, but it has changed already, right? It is a different landscape. And so you have to acknowledge and accept that banking is different today than it was in if you were asleep 20 years ago
Yep.
example. So, my question is, what is a bank in this new world, right? What is the, right? Why does a bank win, right? What do they have to bring to the table there? And how do they need to evolve and think differently in this current world that we're in?
So it's, I say this so often in so many different realms and aspects of the work that we do at AFC. It's there's a certain amount of trust, reliability, cadence, and consistency, right? Those are our four words I talk about and I use a lot. Trust and reliability, cadence, and consistency, right? And why do I say it like that? Anybody could be great for a short amount of time, right? Like, anybody could be, get on a streak and be great for a week. What makes a superstar, right, is that like you're able to continue that, right? There's a continuity, there's a cadence, right? I'm batting, 3 for 5 week after week after week, right? Like the idea that I'm able to sort of become sort of up level, as they say, is that recognition. But and number two is the trust and reliability aspect of it, right? Like I can't now start to like go off on tangents and do things differently, right? If I'm trusting my swing to get me to that cadence and consistency, then I've got to do that. So the one other piece to this is you have to know what you know and know what you don't, right? So you have to take those four things and say, huh, I know what I'm good at. I know that I'm able to maintain cadence and consistency of my trust and reliability, right? And so I've built trust, I've built reliability. I've proven that over the last, right? Ed, you talk to community banks. How many of them will say we've been around for 200 years or we've been around in this community? So those four things, trust, reliability, cadence, and consistency, they've proven it. They know it. They've got it.
Right.
Now, how do you actually recognize that that is your value, right? And more importantly, recognize what you don't have, right? So what's not part of that, right? Like what are the things you need to add to that? That's where the innovation comes in. When they used to build banks, and I live in New York, and so I see it, you see it in New York all over the place, but I'm fairly certain. It's funny, if you walk down Main Street in Nashville, one of the bars is actually located in an old bank that's now
Right.
converted to a bar. And you could
Right.
see it when you look at the structure of that building compared to the others in Nashville. It's got a solid presence. I think there are some pillars on the side of it, right? Like there is
Yeah.
banks were built with big marble pillars to, sort of to pump their chest out, right? Your money is safe here. That is what the bank brings to the table, right? The integrity of the financial system, the trust and reliability that your money is safe from a consumer standpoint. So that is something that many fintechs, and by the way, even responsible fintech, are still struggling with, right? Because as much as there is an adoption amongst consumers who are demanding more fintech services, there's obviously a significant amount of people who are skeptical, right? Like, is my money going to be safe? Like, how does that work? Unfortunately, we've seen the bad actors who have created all sorts of doubt among consumers. And so when we think about that, the community bank needs to be able to transfer that trust and reliability to the fintech company when done right, and embrace the innovation and create that, you get the best of both worlds. At the same time, when a fintech company engages, they need to find a way to like I said, to build that in. How do I create that trust and reliability? And I think historically, I would argue that a lot of the fintech companies would lean on their bank partners for things like that, right? Like, well, we partner with an FDIC insured institution, and so you can trust. How do you, again, what's the right middle ground? And I think both parts of that equation have something to bring to the table, which is I don't know if you could tell, Ed, and it's funny, like it gets me excited because like that's the secret sauce, combining those two.
It's interesting to me that what you didn't say when I asked you what a bank actually is you didn't say that they are a lender, a borrower, a place to put your deposits, right? Right. And similarly, when I spoke to Joe, right, he didn't say that either. He said, look, they need the technology, they have a ledger that needs to be frictionless in the back office. Um, but you talked about characteristics and attributes, trust and reliability, cadence and consistency, innovation, right? Those are capabilities that I think transcend the passbook or even the money, even the buy now pay later, even the earn wage access app you've got on your phone. And really will come of this is that these banks become, businesses that are valued based upon the data which they have on their constituents and being able to then figure out how to monetize that. Whether you want to use the label of media commerce companies or some other vernacular, but it is but what the bank will need is relationships, whether they are digital, whether they have geographical constraints or not, whether they have demographic characteristics, whatever it is, they have relationships and then they have data about those relationships. And then they're going to figure out how do they monetize that, whether that is providing a financial services product or a lifestyle product like American Express does, or whether it is offering a hard good that the Walmart or Amazon does, right? That's all predicated on relationships and data on those relationships.
Yeah, I think too often time people like to pigeonhole sort of like different services. I think if you look at most of the most innovative banks and sort of interesting fintech companies today, they're trying to be a holistic financial services provider for their consumers. Period. Everybody will tell you, like again, the reason you saw the expansion of fintech outside of traditional verticals is because all of a sudden you realize this consumer trusts me for a loan, right? Or this consumer trusts me to have a high yield savings account. This consumer trusts me for um, financial guidance and advice. Once, like in any, and again, those are just three examples of probably 50 more, right? Once I have that consumer who trusts me with one of those things, that fintech company is now trying to do what the bank did, right? Like, ooh, they trust me. Now I need to, again, remember, it goes back to cadence and consistency on the fintech side. Right. I want to serve them everything. I want to give them their loan. I want them to open their account with me. I want them, if they're going to trade, if they have a brokerage account, I want them to do it. I want their retirement account to be with me. Meaning, everybody sort of looks at that customer and says, once I've built that trust, now what else can I do with that trust? And how do I? So yeah, it's data, right? But data is only a piece of it. It's how do you monetize the trust and reliability that you built? And again, like I said, to me, both sides can be successful. There's no, there used to be this story that if fintech succeeds, banks lose. If bank succeeds, fintech lose. Just the opposite. Both have the ability to recognize where they're failing and fix that, and both come together, like I said, and sort of create a path together. They'll look a little bit different, but ultimately they'll be creating and delivering the same service to the consumer.
I think that goes back to your competition breeds excellence, right? Competition, whether it's right from inside the ecosystem, outside the ecosystem, right? Ultimately, you're going to deliver value to your constituency there. You're going to solve the problem of friction and ease of ease of transacting, whatever that transaction is for your ultimate consumer.
That's exactly right. That's exactly right. And again, the goal for us is to continue to tell that story. Because unfortunately, as you and I both know, in any aspect of what we've talked about, someone's going to run afoul, right? And someone's going to make a mistake. And maybe they did it by accident, or maybe they just didn't care about following, the certain guidelines or compliance standards. And unfortunately, that's going to have a ripple effect. And so I think it's so critically important that that sort of the 175 members of the American Fintech Council are continuously telling that story about responsible innovation and bifurcating kind of like, I think some of those who may be playing fast and loose with the rules.
Yeah, you said it earlier, right? Of recognizing the opportunity, identifying the risks to build solutions that solve for those risks. And so there is opportunity, right? There is great change around us. And that is an opportunity for these community banks to reinvent themselves, to evolve, to partner, to evolve their culture and do things differently. But you have to do it responsibly, and I think you hit the nail on the head there. And I appreciate the American Fintech Council delivering this message out there about responsible innovation, because whether there are 4,600 or more or less players in this space, the ones that are going to survive and thrive are the ones that innovate, but do it in that risk-informed manner and make responsible decisions.
Exactly.